Ladies and gentlemen, welcome again. My name is Joanna Barnaś. I am head of the Investors Relations Department at Grupa Azoty S.A., and I have the pleasure of welcoming you at today's conference devoted to the presentation of half-year results of Grupa Azoty in 2016. The results and performance by Grupa Azoty S.A., Grupa Azoty Police, and Grupa Azoty Puławy were published today in the morning at 7 a.m. All reports are available on our websites. Today's conference will be headed by Mr. Paweł Łapiński, Vice President of the Management Board of Grupa Azoty S.A. Mr. Vice President, the floor is yours. Ladies and gentlemen, welcome. First of all, let me take this opportunity and welcome the heads of the key departments in the group companies. On my left-hand side, Mr. Włodzimierz Zasadzki, Vice President of the Management Board of Grupa Azoty Police. On my right-hand side, Mr. Krzysztof Homenda, Vice President of the Management Board of Grupa Azoty Puławy, and Mr. Leszek Jakubów, Financial Director at Grupa Azoty Kędzierzyn. Ladies and gentlemen, I'd like to start today's presentation by discussing the overview of our market condition and market situation. Then we will move on to discuss our detailed performance across the group in terms of key financials. Key financials of group companies will be discussed by my colleagues, and the presentation will be closed by a summary and also a Q&A sessions. Let me start by discussing the key events across the capital group in the second quarter of 2016. In April, Grupa Azoty signed a multi-annual contract with PGNiG for the supply of natural gas. This is the major event of Q2 2016. It is of major importance for the entire group as we have changed the way we buy gas. We have decided to move on from a fixed tariff to market mechanisms. This will definitely improve our competitiveness across Europe and around the world, especially considering that our main competitors, moved on to the market mechanism a long time ago. Another agreement which needs to be mentioned is the agreement with PKP Cargo for the transport of 4 tons of our fertilizers and chemical products. The agreement was signed by 5 companies in Puławy, Police, Tarnów, Kędzierzyn, and Siarkopol. In the coming months and in the near future, we will be one of the founders of the Polish National Foundation. As you already know, the foundation was set up to promote Polish economy, to shape the positive image of the founding companies and their investments in Poland and abroad. In the second quarter, we also continued changes in the composition of both management boards and supervisory boards across the group. All information is published on an ongoing basis on our website. The management board of the group is working on the effective consolidation of our business processes, especially in terms of procurement, sales, investments and development, and also IT. In our opinion, the first effects of those consolidation efforts in the procurement or purchasing area should be visible, should be evident in the third quarter of 2016 already. Let me now move on to detailed information concerning our investments. I would like to first discuss all the major events in the first half of the year. We have spent 550 million PLN on expenditure, which is broken down into business development investment of 284 million PLN, business maintenance investments 130 million, and mandatory investments at 61, and also other investments. Our key efforts in terms of capital expenditure are focusing on production and energy. According to our estimates, capex in 2016 will reach 1.6 billion PLN, which is lower than we expected and had forecast before. The capex is lower due to a number of reasons. First of all, which is quite evident and obvious, is that we are carrying out a number of our investment projects, at a lower price than expected. A number of investments are also delayed due to minor obstacles. They will be carried out a little bit later. That means that their effect will not be visible and accounted for in this year. It could be postponed until the next year. And the third reason is the fact that we needed to perform a number of analyses for our key major investment projects for the group. Those analyses will take time, and we do need more time to perform them, and this is where the delay comes from. We are upholding our earlier declaration of our capex concerning our capex until 2020. If there are any changes to those declarations, which will be determined based on our analysis, we will be informing investors about them as the time goes by. In terms of our strategic investments are concerned, most of those investments are focusing in Zakłady Azotowe Puławy at 2.3 billion PLN. Two of those projects, Puławy Power Plant and extension on upgrade of the nitric acid unit, are in the preparatory phase, whereas the other projects, such as the nitrate mechanical granulation unit, have already entered the performance phase. They are already being carried out. At Police, the key projects account for more than 2 billion PLN. Two of those projects, namely upgrade of the ammonia unit and also modernization of the CHP unit, are already being carried out. They are already in progress, whereas the propylene unit the project is still in the preparatory phase. At Tarnów, the investment projects are to be completed at the turn of 2016 and 17. In Kędzierzyn, the first phase of the CHP plant project will be completed most probably at the turn of the year, 2016-17, whereas the special esters project is still in the preparatory phase. Moving on to market overview. First of all, I'd like to discuss changes in terms of our geographical structure of sales. Year on year, the share of national sales in Poland went up by 3.2 percentage points and now totals 56.1%. The share of the European Union sales went down by 1.5 percentage points. A correction was also recognized for our other areas of sales. Let us now discuss our market outlook by market segment, and starting with fertilizers. As you might know, for a couple of months, we have been observing a strong price correction in the fertilizers market. This is a result of the overall trends in the fertilizer and agricultural sector. And we need to also remember variations in prices in major feedstocks. I'd like to discuss ammonia and urea. The downward correction of prices is about 30%. The same for DAP, around 27%. More than 27% also for NPK fertilizers, and the same goes to ammonia sulfate. As far as our outlook for a couple of months to come is concerned, we are expecting a seasonal increase of demand and of the demand for our products. This is not something that could surprise you, but it is important that we cannot expect a strong rebound in prices. In the past, the seasonal dynamics was stronger than the dynamics we are expecting right now. The main reason for that, in addition to a difficult situation in the agricultural market, is the oversupply of urea around the world, which is important to the prices of our products. In terms of compound fertilizers, we do not expect any improvement in our market outlook. This market can be characterized by a relatively lower demand. Farmers will have to face lower incomes, and they will be reducing the application of fertilizers. Moving on to the plastics segment. In the European plastics segment, there is a strong competition, which does affect the volumes, the prices of our products, and the price pressure from buyers is very strong. I need to emphasize that in the first half of the year, we have noticed a very favorable trend in terms of polyamide, demand for polyamide, which was much higher than expected, especially in terms of the demand comes from producers for the automotive segment. This trend is supposed to continue, is expected to continue in the quarters to come, and it is obvious that the price will be the key factor determining the satisfactory demand in this sector. We need to remember that the oversupply will continue in the market. Therefore, the price will be the key factor. The prices experienced a downward trend around 10% in our major product groups: caprolactam, polyamide 6, benzene, and phenol. Moving on to the chemicals segment. In the chemicals segment, just as in case of the previous segments, we needed to recognize a correction in prices, with one exception, which is melamine, because melamine showed an upward trend. This is a benchmark. Our increase was even higher. In the months to come, we expect that the high demand for melamine will continue and the prices of melamine will remain stable. As you might know, we do have a major feedstock premium or margin on this product. In terms of oxo alcohols, we expect a good situation as well, especially from companies producing plasticizers and acrylates. This should be a good sign for our performance in the quarters to come. The demand for plasticizers in the first 4 months of this year was relatively low. However, over the past 2 months, this situation has reversed and improved considerably. In our opinion, this is a good sign for the periods to come. Moving on to raw materials. I have already mentioned them time and again in my presentation today. Starting from natural gas, which is a key feedstock for us. Most analysts expect a major oversupply of natural gas in this year. According to experts, 2016 should see a breakthrough in the natural gas market because of the situation in the USA. For the first time in the history, the US will become a net exporter of natural gas. This should bring about major developments and changes in the natural gas market, and also this should drive down prices. The price of oil should be correlated strongly with natural gas, except for a certain period of the year when most of the units are stopped for an overhaul. In the months to come, we are also expecting a minor correction in terms of phosphates, both for sulfate and potassium chloride. Moving on to the key financials. The situation I have mentioned before, namely a decline in product prices and also declines observed in terms of raw materials, forced the group to react accordingly. We needed to correct the prices of our products, which is reflected in a downward trend in revenue. The revenue went down by 9.3 percentage percent year on year at 4.3 billion PLN. EBITDA went down to 695 million. It should be noticed that the EBITDA margin was comparable year on year at 15%, while EBIT was down by only 1 percentage point. In my opinion, this is a good sign. This shows that we are correlated with the market. We depend on the market and we need to react accordingly. The net profit across the group is also shown on the slide. Now, which were the factors that shaped and determined our EBITDA? Mainly a decline in prices of our products and also the prices of feedstocks. These were the two factors that shaped our EBITDA to the greatest extent in the first half of the year. 563 million is the positive effect of both the lower prices of our feedstocks and higher efficiency. However, this was offset by higher selling costs and lower price of our products at around 640 million PLN, which adds up to EBITDA at 695 million PLN, as I have mentioned before. Moving on to discussion of our performance segment by segment across the group. We need to focus on three segments: agrofertilizers, chemicals, and plastics. This is where we experienced downward trends. Apart from chemicals, where we reported an upward trend. In all of those segments, apart of chemicals, the situation was down year on year. The breakdown of the share of those segments is shown on the slide. Moving on to more detailed discussion. Let us first focus on fertilizers. In terms of the volumes, you can see that the demand for fertilizers was comparable year on year. It was slightly lower in terms of compound fertilizers, but this difference is very, very narrow. However, in terms of nitrogen fertilizers and ammonia, the volumes went up slightly. And even though the volumes went up in general year on year, we need to remember that the prices were much, much lower. As a result, we have closed our first half of the year at a lower level than a year before. And the same goes for EBITDA at 496 million PLN, which was down 11%. As you can see, EBITDA margin was the same year-on-year at 18%. I'd like to mention that we have recognized a write-down on inventories in this segment. This concerns compound fertilizers at 24.4 million PLN. This was the value of the write-down. If it hadn't been for this write-down, our EBITDA and our EBITDA margin would have been higher year-on-year. Moving on to the plastics segment, this was the weakest segment in the first half of this year. The price pressure from buyers was very strong. Revenue from sales amounted to 571 PLN, which was down 16% year-on-year. We have seen a major downward trend in terms of caprolactam, down 28%. Which was much higher than in terms of polyamide. In terms of caprolactam, we have experienced downward trends both in terms of prices and the volumes. EBITDA at -25 in this segment is something we need to focus on. We are working on improving the situation in the second half of the year. Moving on to the chemicals segment, this was the segment that shows the most varied situation across the segment, where we saw both increases and decreases. In general, the segment revenue amounted to 1.128 billion PLN, which was down 7% year-on-year. EBITDA amounted to 165 million, which was up 77% year-on-year, and the margin went up from 8 to 15%. In terms of statement or our financial position is concerned, we are in a very good situation. If we take a look at our debt, it is only at 189 million PLN. Our debt ratios are at a very safe level. EBITDA margin is comparable to the first half of the previous year, as I have mentioned before. Our costs by type went down by 8%, mainly on the back of lower prices of feedstocks. Other costs are slightly higher than in the previous year. There was an increase in labor costs due to salaries increases and also severance payments. We also had a one-off award bonus at Puławy. According to our assumptions, the depreciation level went up, and depreciation and amortization level went up. We are looking at the positive effects of our projects which are in progress. Let us now move on to the discussion of the situation and financial performance at individual group companies. Starting from Grupa Azoty Puławy. Mr. Krzysztof Homenda will discuss the situation at Puławy. In general, ladies and gentlemen, the trends were in line with Grupa Azoty S.A. The group functions in an overall business environment. And in the first half of the year, this business environment, our market environment, has changed considerably year on year. Because as you know, the overall philosophy of our presentations is to compare the current period, in this case, this is the first half of the year, with the corresponding period in the previous year. But we need to look at those results and at our performance from another perspective as well. We have to remember what were the areas which we could have and did influence, and at certain areas which were absolutely beyond our control. I would not like to repeat what Mr. Łapiński has just said, but this all applies to Grupa Puławy, Azoty Puławy as well. Certain externalities cannot be influenced by us. This is, for instance, the supply of certain product groups and also the corresponding price pressures. And therefore, our revenue, if in the first half of this year, went down year on year by approximately 9%, down to 1,077,770. This translated into a corresponding downward trend in EBITDA and also a lower result in terms of our net profit. I would like to discuss those elements one by one and determine which factors contributed to those results. I have mentioned the factors which determined to a large extent our financial situation, both in terms of the factors we do have an influence on and which are beyond our control. The first two can be influenced by us, and those first two were a positive contributing factor, and these were a considerable decline in feedstock or raw materials costs, which influenced positively our financial performance. The exact amount was 218 million PLN, and this includes natural gas, but also benzene, as well as coal. And the second factor was sales by volumes. These were the two factors which we can and did influence in the first half of the year. In terms of the increase of our sales volumes, this was to a large extent a low margin increase, including goods and merchandise, but also several products, such as oil products at Chorzów or melamine, which was already mentioned by Mr. Łapiński, where you do not see such strong negative trends. Quite the opposite, melamine shown an upward trend. Obviously, there are a number of factors which we cannot influence, however, there are a number of factors which we can influence, but still those factors were negative. First of all, an increase in our selling costs at 12%, 12 million. First of all, this is due to the increase in sales volumes, which naturally increase our selling costs, but also in the first half of the previous year, we recognized a reversal of a write-down, an impairment loss on receivables at 6 million PLN. And this has negatively impacted our results year on year. An increase in the costs of goods and materials sold is related to an increase in our sales volumes. And also, we recognize higher other costs at 34 million, higher other expenses at 44 million, which were also attributed to a number of factors. First of all, we recognize certain impairment losses on assets at Azoty Puławy, Grupa Azoty Puławy. Also, we had higher employee benefits in June, which included a one-off Jubilee or Long Service Award related to the 50th anniversary of Grupa Azoty Puławy. And secondly, an annual bonus paid for 2015. This is the item which shows those two types of costs. Our other expenses also increased due to our results on hedging transactions, which was weaker than a year before. So, in terms of an overall summary, I need to go back to the number which we have mentioned before, 217 million PLN, which 218 million PLN, which was something we did not have any influence on. This is a global trend, a downward trend in the prices of fertilizer products. This was the key factor which determined our EBITDA in the first half of the year, which was down by 30 million PLN year on year. If this price pressure had been stopped, if something between 10 and 20% even, our EBITDA would be comparable year on year. We also need to remember about those one-off costs, employee costs, which I have mentioned before. In terms of our performance by segment at Grupa Azoty Puławy, it's comparable to the situation at Grupa Azoty S.A. Our revenue was lower in two major segments year on year, both in agro and in the chemicals. In terms of our energy segment, our revenue actually went up year on year, which was attributable to the sale of gas and thermal energy produced in cogeneration. I'd like to mention at this point that despite lower revenue in the chemicals segment, our EBITDA in the first half of the year was higher year on year. This was attributable to three elements, or actually two elements. First of all, lower feedstock or raw materials costs, especially gas, natural gas, and benzene. As far as gas is concerned, the decline represented 26 million PLN. And secondly, there was a slight upward trend in terms of the sales, in terms of melamine sales. Moving on to our agro segment at Grupa Azoty Puławy. As we have mentioned before, despite the fact that our key fertilizer products or fertilizer groups by volume, our sales by volume went up, a major price correction or downward price correction resulted in lower revenues from sales by 9% year on year. However, if we consider that we were able to maintain or even increase slightly our sales by volume. This is the element that we should all focus on, because price pressures is related to an oversupply or a high supply of those products. But the fact that we were able to maintain our position across the market in the first half of the year in terms of sales volumes, this is something which which is a positive sign. I could discuss the downward trends by product groups, by fertilizer product groups, one by one, but they range from several percent to up to 20+%. But this, I believe, is not of major importance here. In terms of chemicals, our revenue year on year went down by 11%. However, we did see lower feedstock costs in this segment, which enabled us to see better profitability at 18 percentage point higher or better compared with the first half of the previous year. In terms of our financial position, in terms of our debt ratios and net debt, it is quite obvious that both those items are very good. However, we do realize that it is a major task before Grupa Azoty in general, in terms of the capital group, and also for Grupa Azoty Puławy. This is a task and a challenge for us to maintain such good situation. Those amounts which we are discussing now should be turned to our advantage to develop our business further on. We are well aware of those amounts, and we do treat those amounts as a challenge that is ahead of us. Our profitability is comparable to the previous year, the first half of the previous year. If there are any shifts or changes in this area, those changes are minor. And I do not think that this should be discussed in more detail here, because I believe, and we all know, that the financial situation of the company is positive. What we need is focus on more development and growth projects. In terms of our cost structure, we have mentioned those costs before. A major change versus the first half of the previous year concerns the lower part of this bar chart shown on slide number 30, namely costs of energy. The prices of natural gas went down by more than 36%, and they contributed to the greatest extent to lower energy costs. But the same applies to the cost of coal at more than 8 million PLN, and also electric energy, or electricity in general. We also saw higher costs of amortization and depreciation by more than 10%, which is due to the fact that we completed smaller upgrade or investment projects, which was obvious also at the end of the previous year. In terms of employee benefits and labor costs, these were discussed before. And also we recognize certain additional costs, which were also higher compared with the previous year. They went up, especially in terms of taxes and charges related to emission fees, which went up by 23 million PLN, and also several other items, including a downward trend in hedging transactions compared with the first half of the previous year. Thank you very much. And now we will give the floor over to Mr. Włodzimierz Zasadzki, Vice President of the Management Board at Grupa Azoty Police. Ladies and gentlemen, let me start by discussing certain assessments of our performance, which, according to journalists, are less than expected or lower than expected. We believe that despite a challenging market situation, which from our perspective is even more difficult than for other group companies, because Police generate the major part of its revenue from compound fertilizer. This is a very specificity of our business. And from that perspective, our performance can be summarized as satisfactory. You will see in our discussion of our financial performance slide by slide that the results generated year on year are lower than expected. However, this is due mainly to one-off events. I will discuss those financial results in more detail in a second, but if we eliminate those one-offs, then it would turn out that our EBITDA or EBITDA margin, it would be higher year on year without the one-offs. Now, in terms of one-off events, you can see on this very slide we are discussing right now, slide number 32, that one-offs impacted our financials and financial results to a great extent. Now, in terms of those one-offs, we had two releases which met with a high interest from investors. All those three events relate to Senegal. However, these communications, these releases, relate to ongoing operations undertaken by Africa Investment Group in Senegal, but they were related to sales of fertilizers and not investments. In terms of our investments in Africa, we are analyzing, estimating, and evaluating our performance in terms of capex and investments in Africa. We are in the process of analyzing this situation, and we will inform the market of the results of those analyses in due time. What we believe is that having our own deposits is of major importance for the company. Now, as far as the third event is concerned, this event also relates to Senegal. However, it relates to certain liabilities which are questionable and are questioned by us. They will be recognized either as a cost or they will be recognized as an impairment loss, but we need to explain them. The price of feedstocks, especially phosphates, can be broken down into two elements: the price of production from a mining facility and also the price of freight or transport. There's also a third element. It could be included, which is consultancy costs. This is the element that we are questioning. We believe that this element, consultancy or advisory costs, are of lesser importance or even not important. This is as far as your questions are concerned, because those questions could be posed by investors in relation to our African business. Moving on to the specific key financials. We believe that our performance in general was satisfactory. As I have mentioned before, Police is a company that produces mainly compound fertilizers. And our business environment, business on market situation, affects Police to a greatest extent. Especially the prices of grain and other agricultural products, which are basically falling down. Unfavorable events in the agricultural market, including certain wintertime losses and high stock. These are all those elements are the reason why Polish farmers reported lower income than before. And if a farmer needs to resign from something to save money, they will definitely resign from compound fertilizers in the first place, because those fertilizers are more specialized or more sophisticated, so to speak. However, in the face of lower sales, which we reported, especially in terms of fertilizers, where the downward trend resulted both from lower prices of products and depending whether we analyze the situation quarter by quarter or first half versus first half year on year, this decline was ranged at about 10%. But we also recognize losses in terms of, or decreases in terms of volumes. The management board did their best to focus on certain projects to improve the situation. We sold additional volumes to South America in order to improve that situation, and this is something we need to continue in the periods to come. We need to extend or enlarge our markets, the markets for our products. This could have a positive impact on our sales results. We also saw a major decline in prices in ammonia of nearly 30%. The same for urea at about 10%. And despite all those factors, we did report a good situation. We need to remember that those negative effects in terms of lower prices and lower volumes was offset by a number of positive trends on the cost side, especially in terms of a decline in the prices of natural gas, but also certain measures we have taken, or the management board has taken, in order to reduce certain other cost items. One example, phosphates. In December, we had a relatively high stock of phosphates at rather unfavorable prices. Plus, we received additional supply or deliveries of phosphates in January, at the time when the price trends started to be negative, still we reported higher costs. We reported higher costs. In the second quarter, we managed to report a downward trend in costs. Moving on, in terms of the fertilizers segment alone, the highest decline was reported, both in terms of prices and volumes, in ammonia at more than 40%, as well as urea, 18%. However, I'd like to mention that both revenue and EBITDA include the one-off events we have mentioned before. Without those one-offs, we would have seen much, much better results. There is also one thing that we need to mention at this point, and it is a positive sign. It was a positive sign in the first half of the year. This concerned the sales of titanium white. Now, titanium white was a product which was actually supposed to be dropped some time ago. However, for the first time in many years, we have reported profit in terms of sales of ammonia, of titanium white. And the forecasts and the outlook for this market is very positive, unlike the general outlook for the fertilizers market. We are taking certain measures to improve our efficiency and also the size and the volume of production in this area. As far as the statement of financial position is concerned and the ratios we have mentioned before, in 2016, compared with the previous year, we need to remember again that those ratios include one-offs. However, they are still at a very good level. If our EBITDA margin is comparable year on year, that means that without one-offs, our margins would have been much, much higher compared with the first half of the previous year. The same goes for gross profit and also return on capital employed. Wrapping up, in terms of our cost structure, I'd like to mention, first of all, a decline in the costs of raw materials of energy, which was especially driven by lower prices of natural gas. But I would also like to mention that costs of salaries remained at generally the same level year on year, despite the fact that the company eliminated certain agreements, labor agreements, which are classified as so-called trash agreements. These are contracts other than fixed-term employee contracts. Now, one thing I would like to mention in a conclusion. There is an investment which is of key importance for us. You know what investments I am talking about. This investment will be a major project for us, which will diversify our sources of supply. This is also an investment which is one of the major investments across all of Poland. Our investment process is in line with the schedule. and we will report our progress as time goes by. Of course, I was talking about the investment in Africa. Moving on to Kędzierzyn, Mr. Leszek Jakubów, Financial Director of Grupa Azoty Kędzierzyn. Ladies and gentlemen, the first half of 2016 was closed with the revenue which was down 9% year on year at 852 million. At the same time, we reported EBITDA which was up 23.6% at 150 million, and also higher net profit at 94 million, which was up 15%. Our decline in revenue was attributable to, first of all, lower revenue from our fertilizer segment, and also oxoplasts, or chemicals in general, which accounts for more than 40% of all our revenue, which is the specificity of our group or our company. In terms of EBITDA, an increase in EBITDA was caused mainly by the fertilizer segment, or was driven mainly by the fertilizer segment, especially in terms of chemicals and oxoplasts, which were the main drivers behind our EBITDA. As far as oxoplasts is concerned, these are the semi-products for the production of PCV, or PCV products in general. These are all the products made of PCV which require flexibility in terms of the products, for instance, hoses and other flexible materials. Most of those producers are our clients, and this is our target group of clients. In terms of net profit, our net profit went up, which was driven especially by the plasticizers or oxo segments. And what were the determinants of our EBITDA? If we take a look at the EBITDA bridge at slide number 42, there were two major contributing factors that were negative, and also, on the other hand, we had two major factors which contributed positively. First of all, we recognize lower prices of our raw materials, mainly propylene and natural gas. And propylene is our feedstock used for oxo products. On the other hand, we also noticed higher size volumes, especially in terms of chemicals and oxoplasts. On the other side of the EBITDA bridge, you will see two major factors as well. First of all, the volume of raw materials used, and also declining prices of our products. It is the same mechanism that was discussed before by my colleagues. Declining feedstock prices, declining product prices affected us as well. Moving on to our performance by segment, as I have mentioned, our revenue from oxo products represent around 30% of our revenue. This depends on the exact period. But in terms of fertilizers, we reported 463 million in revenue. Our revenue in terms of fertilizers went down, while EBITDA went up. In terms of oxo alcohols, our revenue went down 11%, whereas EBITDA went up from -4 million in the first half of the previous year to +25 million in the first half of this year. This is an effect of savings and efficiency measures in this area. We are learning how to be more and more efficient in terms of OXO alcohols production, and this is the direction we should take for the future. As far as our balance sheet is concerned, or our statement of financial position, one of the profitability ratios we are recognizing is net debt. Our net debt went up to 140 million PLN, but this is directly attributable to our development of our growth. This is related to the construction of our CHP plants, which should be completed by the end of the year or at the turn of the year. As you can see, all profitability ratios recognized or shown in the lower part of this table went up, and all our other ratios, profitability ratios, remained on a safe level. Thank you very much for the discussion of company segment across the group. As you can see, our market is a variable one, both in terms of the product side and in terms of the feedstock side. We managed to stay at the profitability level which was comparable year on year. We would like to emphasize that we are on the very safe side in terms of debt, and we also see a lot of potential and a lot of room for further growth, for implementing a number of projects which we are planning for the future. When we complete those projects, we will see that the group will be much stronger and will be in a much better competitive position around the world, not only in Poland. Thank you very much.